Houston didn't crash in 2025, it quietly shifted. And if you only read headlines, you probably missed what actually happened. So today I want to walk you through what the Houston housing market really did in 2025. So what the data is telling us right now and what this means if you're buying, selling, or investing in 2026. No hype, just facts and simple strategy. So let's start with the big picture. The Houston housing market wrapped up 2025 on a positive note. So in December alone, total property sales increased 1.2% year over year, and total dollar volume, it rose about 2.1%, reaching $3.6 billion. So that tells us something important. Despite higher rates and non-stop talk of a slowdown, people are still buying homes in Houston. Money is still moving. And now here's where the shift really happened. So the total number of active listings was 16.5% higher than last year, with over 52,700 homes on the market. Now that's a big change. So for buyers, this means more options, more leverage, and less pressure to overpay. For sellers, this means pricing it right from day one, and presenting the home properly is no longer optional. We've officially moved away from all the frenzy of the last few years and into a more balanced market. So let's talk specifically about single family homes. In December, single family home sales totaled 7,456, which is up 2.8% from last year. So again, sales are going up. The median price, it stayed relatively flat, about 335, but the average price increased to 425,500. Now here's what really matters. When median prices stay flat but average prices increase, it usually means that well-priced homes in desirable areas are still moving, while overpriced homes will not move. So the market didn't stop, it just got more selective. Price per square foot was about $174, which is slightly lower than last year, but that tells us buyers are being more cautious. So they're doing the math, they're comparing homes, and they are not willing to pay a premium without a reason. So today's buyers are more educated, payment focused, and very value driven. Now let's talk about days on market. In December, homes took an average of 64 days to sell. That's up about from 59 days last year, and the highest we've seen since early Feb of 2020. Now this is a big deal. Longer days on market don't mean homes aren't selling. It just means the first price is no longer the final price. So homes that are priced correctly and marketed well are still selling, and homes that are not, they will sit. So December closings rose 9% year over year, with close to 4,900 homes sold, and median prices were about 1.5%, and average prices rose about 2.5%. So even with higher inventory and longer days on market, closings still increased. So that's a sign of stability and not chaos. So let's talk supply. Houston now has about 4.5 months of inventory. Nationally, inventory sits about close to 3.3 months, and this tells us that Houston is normalizing faster than many other markets. And historically speaking, 4 to 6 months of inventory is considered a very healthy market, which is balanced, predictable, and more sustainable. So what does all of this mean for 2026? If you're a buyer, you have more negotiating power than you've ever had in years, but you still need to move decisively on the right homes. And if you're a seller, strategy matters more than timing. Pricing, presentation, and marketing will determine your outcome and not hope. So if you're an investor, Houston is doing exactly what strong markets do. It's stabilizing. So this isn't a crash, it's a recalibration. And in a market like this, having the right plan matters more than ever. So if you want to understand what all of this data means for your specific neighborhood or your price point, send me a message with the word Houston and I'll go over and would love to break it down for you. If you have any questions, let me know. My name is Prateek Verma. Thank you.